Remember early 2020, a mysterious virus was emerging in Wuhan, China, but for most investors it felt a world away. Global markets were flying high. The S&P 500 and the Dow Jones were hitting new records. Over in Europe, the Stoxx 600 was near its peak, and Japan's Nikkei 225 was doing just as well. It seemed like nothing could stop the bull run. The common thinking, this was just a regional issue, another SARS, contained and quickly forgotten. But then, the virus started to travel. South Korea, Italy, and soon, the United States. The headlines grew more alarming, and a sense of unease began to creep into the financial world. By late February, the first real cracks appeared. On February 24th, the S&P 500 suddenly dropped 3%. That single day kicked off the worst week for markets since the 2008 financial crisis. In just a few sessions, the Dow Jones shed over 3,500 points. The panic went global. London's FTSE 100 and Germany's DAX plummeted more than 10% that week. In Asia, Japan's Nikkei fell sharply, and Hong Kong's Hang Seng Index wiped out all its gains for the year. The abstract threat of lockdowns and broken supply chains was suddenly a terrifyingly real possibility. And then came the week that investors will forever call Black Week. It started on Monday, March 9th. US markets plunged over 7% right at the open, triggering circuit breakers that halted all trading for 15 minutes. It was the first time that had happened since 1997. To make matters worse, oil prices crashed nearly 25% after a standoff between OPEC and Russia. Just 3 days later, on Black Thursday, the S&P 500 suffered another catastrophic loss, dropping nearly 10% in a single session. The Dow fell a staggering 2,352 points. European stocks had one of their worst days in history, with London's FTSE 100 down over 10% and Germany's DAX losing more than 12%. The chaos was so intense that Brazil's stock exchange had to suspend trading twice in one day, but the worst was yet to come. On March 16th, the Dow Jones experienced its darkest day since 1987, collapsing almost 13%. That's a 2,997-point loss. The Russell 2000 index, which tracks smaller companies, lost over 14% in a single day. Pure panic had taken over. Investors dumped everything and ran for the perceived safety of cash and US government bonds. Traditional safe havens like the Japanese yen and gold surged. Meanwhile, emerging market currencies were in freefall. The Brazilian real and the Mexican peso hit historic lows against the dollar. The global financial system was on the brink of freezing over. Faced with a full-blown crisis, central banks and governments unleashed an unprecedented wave of support. On March 15th, the US Federal Reserve slashed interest rates to near zero and announced a massive program of asset purchases. Shortly after, the US government rolled out the $2 trillion CARES Act to support businesses and individuals. The European Central Bank expanded its own emergency purchase program, and the Bank of England cut its key interest rate to a rock-bottom 0.1%. Volatility went through the roof. The VIX, Wall Street's fear gauge, spiked above 80, a level higher than during the 2008 financial meltdown. March 23rd finally marked the bottom. By then, the S&P 500 was down a gut-wrenching 34% from its February high. If you found this look back at the 2020 crash fascinating, make sure to hit that like button and subscribe to the channel. We post new videos exploring major financial events every 2 days, and you won't want to miss what's next. Thanks for watching.